We'll start off in this S&P 500 daily cloud chart, looking back to my number one crowning achievement by calling the top back in the beginning of 2022. And the only thing that beats that is calling the bottom in October 2022. And fast forward to the current era, I ask, is this the top that we just reached here? I reconfigured this rising wedge as I noticed a little bit too late, a few days, that I could connect some candle wick tops here to this high back here, and then this line to follow the parabolic move, the bottom of the wicks, and it fits pretty nice. I'm going to zoom in and we'll take a closer look. And we really didn't need this reconfiguration of the rising wedge to call the temporary top or trend exhaustion as we've seen in the DeMark indicators. But this would have been nice to be looking at along with that. So this new resistance line, we'll call it, because I do not believe we'll ever reach this parabolic uptrend line again. That will go off into oblivion before price ever gets near it. And so this resistance line is now at 4796.91. And it's now the S&P daily chart's turn to have the inverted hammer candle here. And the high of that tall wick for the fourth is 4726.78. And then that tall red candle, that's the other part of the inverted hammer candle pattern. Its high is 4729.29. So the high is higher than this candle wick. So price will need to close above this high, 4729.29, for tomorrow to negate the very bearish inverted hammer candle pattern here. And there's no up day with a down close, hollow red candle. This just has a solid hammer right here. So if by any miracle it does head up, well, like it did today, it headed up pretty good. And if it does the same thing and it looks like it's not going to close above that candle wick top and before it, this tall red one, then start shorting the S&P 500, or actually if it can make it up to halfway above this candlestick or maybe a little higher, somewhere near this high up here for this tall red candle wick, start shorting as we were doing over here, and hopefully you were following along before the beginning of the new year. And in the DeMark daily cloud chart for the S&P 500, we can see that the D wave up wave A and D wave down wave B has printed, and that puts D wave on the D wave up wave B and the D wave down wave C. So for the next 3 trading days, price would need to tick higher than this high from December 28th, and that will make the 5 shift over along with the A, as that's what it would take to print the B. But if it ticks higher than this high, then we'll have a shift, and that's for the next 3 days. And that goes for the D wave down wave C to print. So if it makes it up past that, then we'll get the shift rather than printing the D wave down wave C. And zigzag, if it does not tick higher than this high from the 4th for tomorrow on the 5th, then the swing point will happen here at where the D wave, up wave 5 and down wave A is printed here. So that will definitely confirm the bearish thesis and just start shorting the S&P 500. And if you do that, definitely stay nimble, because I don't expect it to go down too far, although this does look ominous. We have the baseline right around the middle of the 4600 area that I'm looking to buy. And this trend factor down 1 is right there also. And normally I do not do any buying at the trend factor down 1. I will wait at least until down 2 gets hit and then just start buying. And if it keeps going, well, I'll just keep buying exponentially as it hits these trend factors. But in this case, I will start buying and adding to existing positions when it starts hitting this trend factor down 1 and baseline. And then if it goes under it in a decisive manner, I might jettison exactly what I just did and then wait for it to hit the trend factor down 2. But I just cannot believe that we're going down that far. And the Fed is out there jawboning everybody down. But before that, they were all convinced and had conviction that they were right, that there's going to be 6 or 7 rate cuts. And the Fed says, if we're lucky, 3, and they're not going to start in March. So now they've pushed it back to the first cut in May and probably lapped off about 3 or 4 of them. And if that's the case, right now I say we took 1 cut away. So if there's 3 more to go, then yeah, we could get down below this down 2 for trend factor and maybe even reach 3 or the top of the cloud. Maybe the 0.764 arc at that level. These will start moving up a little more each day, about 6 to 8 points. So I don't know. My conviction says to start adding and buying around the middle of the 4600 zone for S&P 500. And in the meantime, if the indications are screaming, please short me, then I will, but I will definitely stay nimble around this area, and it's not that far away. And as a disclaimer, that's not me. I'm not shorting. I already did up here, and if you were following along, you're sitting pretty too.